Will online alternative financing replace the banks? In our recent benchmarking report, we surveyed over 500 platforms in the Asia Pacific and China, and we found that around 1.1 billion US dollars was being lent through these platforms in 2015 alone, which was a growth rate of over 300% year on year. Now, a lot of this volume is going to small businesses who are looking to obtain funds in a more efficient manner than they could through the traditional financial institutions. Now, this includes services such as quick turnaround on obtaining the funds, either overnight or within a few days, versus maybe a time frame of a week or two, and also marketing operations through the platform's website. So they get featured on the platform's websites and maybe obtain some additional business that way. For borrowers, they can obtain funds at a slightly lower rate than they may be otherwise able to through the banks. And for investors, they are offered typically a slightly higher rate of return than they will obtain through deposits at a bank or bonds. Now, it looks as though these types of platforms are offering services to a niche that it's not that they can't obtain funds from a bank, but they're traditionally not well served by banks because they don't have the long histories of earning cash flow that banks like to see before they make lending decisions. So they're using different lending decision criteria, and thus we think that there's room for these platforms to grow and improve in the future.